Hi and welcome back to my daily report market videos with me, Japan market analyst at Hantec. On Tuesday, the 2nd of July, let's have a look at euro dollar, which is interesting because it had this really strong bear candle yesterday, really significant move to the downside. It lost that support at 13.50, broke below 13.25, which was this basically what I've been taking as the neckline as this base pattern, and also below 13 big figure. 13 big figure, which becomes a basis of resistance today, 12.99 on to the pip. So 13 big figure. 13 big figure is a historic pivot line. I've actually taken it out, but let's put it back in. 13 figure. It's just a basis of support that became resistance. Basis of resistance. It's not to the pit, but it's a good gauge. Anyway, so breaking below that, I think it turns the market a little bit certainly more cautious given that big bear candle. But you've got these momentum indicators which have ticked lower. Ticked lower from strong configuration though, and I think that unless the RSI went below 45. I don't think you're getting too worked up about this quite yet, because it's just effectively just a little unwinding move that we've got at the moment. You've got a bear cross which is coming through, but you did see a similar one that we had back in mid-June. So I think that what you'd need to see is RSI below 45, decisive bear cross on the MACD, and stochastics just accelerating lower, and you've not yet got that. And I think that it's interesting that we're still trading above this 1265, a previous breakout line. It's an old pivot as well. So 1265, that held as support initially today, 1273 on the low. And unless you start to break down that, I don't think you can really open the 1180 support of the key June low. So at the moment, this is a reaction that the market is obviously taken on board from the dollar strengthening move, but it's not gained too much traction this morning. It's not continued lower, and I think if it now starts to close below 1265, that would be a bit of a trigger signal. But for now, it's holding on. But it does need to quite quickly, I think, recover back above 1300. 1325 and even 1350 to really regain some traction in terms of being a recovery. For now, you're looking at a little bit more of a negative bias coming through on the hourly chart momentum signals. The RSI went below 30, failed around 50. So I think that that is a situation that needs to be rectified. You need to see the RSI above 60 to really suggest a recovery is back in play. You need to also see the MACD lines above neutral. Look at this. Consistently in the past 4 or 5 sessions, the MACD lines haven't really been above neutral. So you'd need to see that to suggest again that the bulls are back in control. But for now, you're looking a little bit more of a negative bias, but without being decisively negative. And that 1180 low, for example, isn't yet really open. I think that it would be on a move below 1265, but for now it's holding on as support. So how the bulls respond in the next day or so is going to be key. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.